Hello, everyone, and welcome to today's webinar, DeFi on Bitcoin, brought to you by Crypto Mondays. We've got three great featured guests with us today, and they'll be introducing themselves shortly. But before I turn the floor over to our guests, Crypto Mondays, for those who don't know, we started as a meetup in January of 2018. Today, we're the largest IRL event in Web3 with over 100,000 members across more than 60 chapters. I was just at my 38th chapter visited 2 weeks ago, Crypto Monday Barcelona, which rocked. We also started an advisory service in 2022. We're now more than 300 Web3 experts. And then we started building our own things. First thing we built was we've now done 2 cohorts of an AI Web3 accelerator. We're now building a community management AI agent called Monday. We started the Decentralized AI Agent Alliance because anybody building decentralized AI agents is running up against the same laundry list of problems. So let's solve them collectively instead of in silos. And we now have more than 125 founding members. So that's going great. And then the newest product that we introduced, soft launched yesterday, was Bitcoin Treasury on chain. So you can go to powered by Crypto Mondays, and you can go to btalk.app. It's just soft launch. We're selling 125, or going to take in 125 Bitcoin. And the simple idea is, you give us 1 Bitcoin today, and over time it will grow and grow and grow. In addition to the value of Bitcoin growing and growing. So if you had bought MicroStrategy, is obviously the most famous Bitcoin treasury when they launched when they announced their Bitcoin strategy in 2020. If you had put 1 Bitcoin into MicroStrategy today, you'd have 3.4 Bitcoin. So that's the idea. It's all about stacking sats, and Bitcoin treasuries enable you to stack more sats. And we're the first Bitcoin treasury. There are hundreds of these now, but we're the first one that's totally on chain, completely transparent. So we're going to be having a webinar about that in a couple of days. So I'll put that link in the chat in just a moment. And with that, as I said, we've got 3 great guests, who are all going to talk about DeFi on Bitcoin from a different angle. They're all going to talk for something like 6 to 8 minutes, and then so when they're done, which will be about around halfway through the call, we'll then turn it over to Q&A from the audience. So if you have questions, just raise your hand, and we will take and we'll bring you up on stage, and you can ask the questions yourself. And we'll take the questions, in the order that the hands were raised. And with that, we'll turn it over to our first guest, Robin from Liquidium. Robin.
Hey, thanks. Great to be here, and happy to share a little bit about sort of like Bitcoin DeFi from my point of view. Obviously, being a builder in the Bitcoin DeFi space for about 3 years at this point. And so first of all, I think to discuss the current state of the market, or kind of like share more about that, we have obviously seen like DeFi.
Well, Robin, you want to you just real quick first, where are you calling in from?
Yeah, sorry. So I guess my name is Robin. I'm the CEO and co-founder of Liquidium. Liquidium is a Bitcoin lending protocol. We have a peer-to-peer lending protocol, which is for Bitcoin native assets and native Bitcoin, and we're working on launching a cross-chain lending platform where you will be able to borrow and lend across different blockchains, including native Bitcoin. I'm calling in from Malta right now, and yeah, thanks for having me here. Missed that introduction, but yeah, happy to dive in to talk more about the state of DeFi.
Yeah, no, go. Yeah, rock and roll.
Cool. So obviously, as I said, or DeFi on Ethereum and Solana has been a thing for a long time now. I think DeFi kind of Ethereum kind of kickstarted everything there, with the idea, of course, that Ethereum was a programmable blockchain where you could do more than just like regular transactions compared to Bitcoin. Like you could actually build applications on top of that network and on top of that blockchain and have smart contracts written on the blockchain that are verifiable and executed based on outcomes and without sort of like centralized entities in between. Um, that concept is fantastic, obviously. But at the end of the day, Bitcoin is the largest cryptocurrency, and all roads in crypto lead back to Bitcoin, in my opinion. So it was about the
Spoken like a
time.
true Bitcoin maxi.
I mean I'm very much chain agnostic in the sense that I admire the innovation that the competition of different chains bring, but I think that Bitcoin is the most decentralized and secure cryptocurrency out there, and also that Bitcoin, if any cryptocurrency has a chance of mass adoption, I think it's Bitcoin. And we're already kind of like seeing that happen. So I think the Ethereum kind of brought us new ideas and brought innovation into the space and a lot of learning experiences how DeFi can look and how protocols should be built for them to be very transparent and decentralized and verifiable. And yeah, it was inevitable, in my opinion, that this will ultimately also happen on Bitcoin. In our case, just to talk about the experience that, or like the journey that we went through with Liquidium. We always wanted to build something like DeFi on Bitcoin, essentially, and we started building a lending protocol back in summer of 2022, and at that time Bitcoin was still only pretty much used for like regular transactions. And we tried to find something like if you want to have like a lending environment, you need something that you can borrow against, something that can be used as collateral. So you kind of like need two different assets. And Bitcoin didn't have that at that time. So we were looking at sort of like programmable blockchains that are as close to Bitcoin as possible. And back then we discovered Stacks, and Stacks sort of tried to promise that vision of a programmable blockchain that is very close to Bitcoin. And that's where we started. Built the first NFT lending protocol on Stacks, and then fast forward a couple months after we had this idea, and like basically 2-3 weeks after we launched the first version of that protocol, something happened on Bitcoin with the name ordinals. So ordinals was kind of like this white paper released by Casey Rodamore, describing how we can have alternative assets, specifically in the form of basically an NFT on native Bitcoin.
Yeah, Robin,
And
Robin, I think you can assume this is a pretty sophisticated crowd.
yeah, yeah. I guess okay, then so with ordinals, that was kind of like the first time that we had different assets on Bitcoin, obviously followed by runes, BRC20 tokens, and so on. And that enabled us to be able to build what we had on Stacks on native Bitcoin. So and I think this kind of sparked Bitcoin DeFi in a lot of ways, because now you had multiple assets on Bitcoin where you are finally able to like now it makes sense to build a marketplace. Now it makes sense to build a lending protocol. Now it makes sense to build perps and all of these things, because now you can suddenly like trade different assets on Bitcoin. And so fast forward to now, we're obviously in a much different state when it comes to applications on Bitcoin compared to 2 years ago. And I think that we're still very much in the infancy of all of that, because right now the main market that is addressing it is sort of like this degen market, this like these people that are like super into it and like have a very, very deep understanding of the technology. While in the Ethereum space, we already have institutions that have adopted DeFi. Like Aave is, for example, a product that is being used by multiple institutions, by large scale funds and liquidity providers and so on. And I think that we are going to get there. And I think on Bitcoin, it's going to get so much bigger than it is on Ethereum, because Bitcoin is obviously the cryptocurrency that is being adopted as the that institutions use as their treasury reserves now and so on. So basically, they need ways to be able to utilize their Bitcoin. There are still things that you need to pay in fiat. The ability to kind of trade your Bitcoin for fiat, for stable coins, or borrow and lend against that Bitcoin, ability to kind of like put your Bitcoin to work, earn yield on it. I think all of these things are coming and will be adopted fairly soon. I think there was an article today actually. Yeah, JP Morgan explores lending against crypto. So that just dropped today. A friend of mine sent me that over. So we're getting there. Like the banks are interested now. The institutions are interested. I
What
think
is what is Liquidity doing today?
yeah. So uh, today we are a peer-to-peer lending marketplace where you can use ordinals, runes, and BRC20 tokens as collateral and borrow native Bitcoin against it. All of this is fully on layer one Bitcoin, so fully on chain. Um, we're using something called DLCs, discrete log contracts, which are essentially a very simple form of a smart contract, but native to Bitcoin. They have been on Bitcoin since like 2021. I think it might be even longer than that. And essentially, they allow you to basically build a contract with an executable outcome on Bitcoin, and we're using these for our peer-to-peer lending. And
And
what we're
then
working,
people get the Bitcoin. They can either hold it for the investment or they can sell it for and turn it into fiat if they want.
yeah, exactly. So it's really up to them, like what they want to do with it. The main use case here is that people basically have these alternative assets like ordinals, runes, and BRC20 tokens, and they need liquidity without having to sell their existing
Yeah.
assets. So that's why people are borrowing against these assets. They are borrowing Bitcoin, and then sometimes they're like using that Bitcoin to kind of like participate in trading or to uh, like uh, even hedge their positions of their assets that they're borrowing against. And then basically there is a binary outcome. If they repay the loan, they get back the collateral. If they don't repay the loan, they don't get back the collateral and get to keep the BTC.
No, makes a lot of sense. Well, great. Well, thanks for the discussion and thanks for sticking around for the Q&A. So there'll be lots more to talk about. Next up, we'll turn it over to Parth.
Hey, thanks, Lou. Good to discuss this finally. We've been discussing one-on-one about this, as you know, but let's get into the weeds. And glad to have the other builders here as well. So very briefly, Parth here, founding contributor of Tachi on Bitcoin, which we believe is a spiritual successor to Lightning and finally solves the expressibility and high-speed scalability for generalizable programmability on SATs. I'm calling out of Pune right now. Really excited to basically build the future of Bitcoin programmability at scale.
Yeah, I just met Parth. I just met Parth a few weeks ago at BTC Vegas and was super impressed.
Yeah, we had a great time. We had a great time in Vegas, and had a great support from a lot of the Bit Angels OGs, like like Turpin, Chom, and of course Adele and you as well. So good to have you there. What we were discussing is basically right, like Robin said, expressibility is an issue, scalability is an issue, and smart contracts for native sats is an issue and continues to be an issue. Ordinals, of course, opened the door for the first, I would say, generation of making sats programmable in one way. Unfortunately, a lot of issues still remain for really building the DeFi native experience for BTC that you see in EVM, right? Or even in Solana VM. And that's where we found there's a massive gap. And if you allow me, I'll just share something very interesting. I'll just share my screen. Let me know if you can see it. So we'll get to what we're building, which is Tachi, which is a breakthrough meta protocol. But more importantly, we were discussing about what's the state of the market. And that's where we come to the real pain point, right? For an institution, for an ETF issuer, for a family office, for an OG. This is, of course, a bit outdated. It's about 369K, according to Bitcoin layers as of today, which is basically onboarded onto DeFi. And that's basically less than 2%, right, of actual BTC supply. So it's a massive failure from our industry standpoint when you think about it, right? It's extremely pathetic about it's been so many years, and the vast majority of Bitcoin that is being used is from WBTC. And although there have been multiple protocol L2 and rollup attempts to solve this on top of Bitcoin itself, we're not able to reach that escape velocity. And that's kind of the issue that we're tackling on our side, which is with a deep tech innovation for a cryptographic way to solve this without taking Bitcoin outside of Bitcoin security guarantees and still having thousands of TPS with 2 to 3 second economic finality and EVM composability for those sats. And I think that would be the unlock required for making Bitcoin and Bitcoin native DeFi palatable for institutions to say that, hey, we're not going to just give up all our custody to a centralized custodian to wrap it up and then use it on ETH or Solana. We're going to be using our native BTC treasuries with unilateral exit rights. That's really important. And self-custody while having the exposure to EVM-based smart contracts. We'll get into what we're going to be doing in a while. But yeah, this is something I wanted to quickly share.
Terrific. Sid?
Thank you guys for having me up here. Good to see some familiar faces, and Parth and Robin. It's good to see you guys. Lou, thanks for having me on here. So yeah, briefly, I'm Sid. I'm the founder of Bima. We're enabling people to borrow Bitcoin, borrow stables against their Bitcoin, and use that for different strategies. Quite simply, I'm based out of Jersey, so I think.
I'm in Jersey as well at the moment.
Oh, beautiful. All right, great. Okay, good. We got the Sopranos here together then. So I think the story of why, I mean, liquidity in its own is borrowing Bitcoin against Bitcoin, which is important. But I think there's also another lens to this, which is why should we borrow stable dollars against Bitcoin? You look at MakerDAO and all these different types of similar structures. It's simple, right? I want to basically have a loan against, my line of credit against a volatile asset. What do Elon and Jeff Bezos do, right? They don't want to pay taxes, so they take lines of credit against their volatile stocks, and then that's how they make money on this. There's some incentive that's keeping Elon and Jeff interested in borrowing against their stocks, and that's staying away from taxes. But the use case for this for Bitcoiners is a little bit different, right? And in this sense, they don't want to give up their upside of their Bitcoin. That's one of the biggest things that they really feel is a hardship. There was a guy that bought pizza for 10,000 Bitcoin back in the day when it used to be a couple bucks, and now he's lost out on over $1 billion worth of upside. There was the third co-founder of Apple. It's just all the same story. Third co-founder of Apple had maybe 20% of the company that he sold for $800 back in the 80s just to make rent. He lost out on hundreds of billions of dollars. That's why borrowing against these volatile, very lucrative, highly upside-based assets is super important. In one lens, we're very similar to MakerDAO. You deposit your Bitcoin into a smart contract and output it and use it for DeFi operations. We have vaults. You can take our native stable USBD and then deploy it through different strategy vaults that fit you to get yield on top of it. But there's another lens that we actually work with that actually enables people to be able to not only use the stables in a manner that befits them, but also enables institutions to get into this as well. Robin mentioned JP Morgan getting into the action, throwing their hat in the ring. I've worked for numerous institutions when they were getting in the forefront of the cutting edge for digital assets, from working under Christine Moy at Apollo or course, I worked in the prior life under Tim Draper, and I think his entire life story with Bitcoin is its own kind of phenomenal stuff. But people who understand it, they get it, and institutions just need a little bit to be interested. I think as the price goes up, there's more and more institutional interest. And I think I really see our platform as two things. One, a retail user experience for people to be able to borrow against their Bitcoin and deploy it for yield generating strategies. And second, it's a utility for institutions to be able to borrow stable dollars against their Bitcoin and deposit it into yield generating strategies. That takes a little bit more leg lifting. That takes a little bit more liaisoning with prime brokers and market makers. But I think that's where the future is going. It's also focusing on self-custody. So we're focusing on the future of this, which is that how can we arrange ways for people to be able to borrow in different degrees of custody and different degrees of risk. So that's basically what I do. This is basically what BEMA does. And the incentive is clear. And I'll end on this of why there needs to be an upside of both Bitcoin and also stables. When I was working for Draper Associates, we knew an Argentinian family office. And I say the story a lot because this kind of tells everything you need to know. This is a very rich Argentinian family office, and they were millionaires 3 times over. Each and every single time they became a millionaire, the interest rate adjusted, and they weren't a millionaire anymore. And they got so annoyed that they had to make more money to beat the interest rate that they were like, well, we need to deploy into something that fits our thesis to hedge against this. That's what Bitcoin was sort of purviewed as, a hedge against their inflation. And they looked at Draper Associates and the Bitcoin strategy as a way to utilize it. But this was during 21, 22, when Bitcoin started going down tremendously, and there were downside shocks, especially when it came to El Salvador and all these different types of blow-ups in the crypto space. They got very scared. This is why the best of both worlds really becomes super important. I get to keep my Bitcoin. I don't need to give up the upside. And the second component about this is I get to get stable dollars or stable units of currency to be able to use in day-to-day payments. Miners want to use this for payments. They don't want to sell their Bitcoin until they would rather get liquidated from their Bitcoin than sell it. And that's why the value of Bitcoin becomes super important to borrow against. So that's really what our CDP does. That's why stables work well. And this is why Bitcoin stablecoins are the future. And honestly, I'll end on this before I pass it to you, Lou, but Tim Draper posted a tweet recently that I really liked, and this is very emblematic of what he really thinks about this. He said that I don't invest in, many times there are contrarian bets, right? People who take the other side. We usually take bets that don't have a dissenting voice because it's so obvious and clear. That's what I think that Bitcoin stablecoins are. It's so obvious and clear that there isn't really a dissenting voice as to why you would want to go against it. There might be, but very few.
Well, cool. Well, thanks for that, Sid. And so, can you talk a little bit? How long has BEMA been doing that? And you can talk about how the market's evolved, kind of, and how your business has evolved during that time.
Absolutely. So we've been active since last year of 24, around April. We launched our mainnet. We're having a few tens of millions come through. We're looking to size that to the 9-fig range and beyond as we sort of start closing. But one of the biggest things I've seen as the market evolves is that as the Bitcoin prices go up, so there's a very big sort of side market thing, right? There's the altcoin market, which is, tokens like what we're going to launch in the future. People invest in that. And then you have the blue chips, Bitcoin and ETH.
I wouldn't say that on a Bitcoin call.
Whoops. But I think one of the biggest things that's there with this is that you see these cycles change, and you see that as investors get more, they're like, okay, great, I've made enough of money on this altcoin, I put it back into Bitcoin. Bitcoin is the safe haven for them to be able to get access to these different types of upsides, right? That's it, right? It's just cycle to cycle, market to market. And one thing I've noticed in this is that as the price has gone higher and higher and higher for Bitcoin, the demand for borrowing against it has grown even higher. People want to make dollars against this because they're only seeing the charts go up and up and up. I follow the BTC Power Law, Giovanni, on Twitter. He basically said there's an R squared of 95% that Bitcoin is a force of nature. And I really do see that. And people really utilize that to say that I want to be able to make stable dollars today to be able to invest. Well, one change that we had since inception is that we wanted to make MakerDAO strategy, right? We wanted to just do this, but I'll be very honest with you, and this is my contrarian take, if anything, when it comes to stables. There isn't really that much of utility for stables outside of USDC, USDT. The best stables that are derivative to them are derivatives of them. They are wrappers of USDC, USDT. That's how markets adopt it. And at the end of the day, you have to entertain market makers. Market makers ask you, well, what can I do with this? Can I redeem it for USDC or USDT? And that's pretty hard to do when you have underlying Bitcoin backing it. So in our process, what we've been able to do is we've been able to kind of focus on both of those. We want a decentralized paradigm where people are able to borrow against their Bitcoin, but we also need them to be able to use that for something. So this is where we've worked with several different types of mechanisms to enable liquidity for USBD.
Okay, terrific. Thanks for that. And again, so I'll ask each of our panelists a question and then open it up for the audience. So if anybody has questions for panelists, raise the hand. So Robin, kind of the same question to you. Kind of talk a little bit more about kind of the major lessons learned in the time that the liquidity's been open.
Yeah. So I mean, we've obviously seen a very, very strong demand within the lending space. Today we have processed around $500 million in loans, over 104,000 loans since we've been live on Bitcoin, and that is only for Bitcoin assets.
What's a duration of the average duration of the loan?
So these types of loans that we're doing are very fast-paced loans. So it's like a 14 to 30-day loan, something in that range. Usually short-term liquidity for opportunities that the people see right away, and then quick repayments after that once people are kind of in profit. And one big learning that we have had, and Sid already kind of covered that, is people don't only want to have these like degen short-term peer-to-peer loans, but they want to also borrow against their Bitcoin. And I think what Sid is doing with Bima is amazing in the sense that you can that you basically mint a stable coin that is backed by Bitcoin. I think that's one way to go about it. We're currently working on a cross-chain lending product where you will basically be able to borrow all kinds of assets against your native Bitcoin on chains like Ethereum and Solana. So if you prefer like stable coins on Ethereum or Solana, something like USDT or USDC, that is basically what we're aiming to enable right now, to let people borrow these assets against the Bitcoin. And I think that is kind of like when we started, we thought this is a retail only product and institutions would never want to deal with it. We were so wrong. Institutions want that, like they really want that. And that's why we're kind of like opening up a new product now and working on this new platform. Yeah.
Great. And when you say institutions want it, are you seeing it? Is this a global phenomena or is it more in Asia than elsewhere?
Actually, most of our institutional clients right now are US based. So mostly like funds that have a lot of Bitcoin. Notable ones include Keyrock, which is one large market maker. They have been
Just talking to
using
them
Liquidium
earlier today.
Oh, awesome. Then UTXO Management, which is kind of like the fund that is derived off of Bitcoin Magazine, as well as CMS Holdings. So these three are kind of like active participants in Bitcoin DeFi, I would say, and like to kind of like play around with the new opportunities to grow their Bitcoin.
Super interesting. Okay, well, thanks. And Parth, you're not guys are not out live yet, but yeah, while you've been building and building, obviously a challenge always, even if you're open, but particularly while you're building, I think is the market's evolving. So how has kind of your game plan changed, and what have you been seeing over the last year?
Yeah, so this R&D effort to finally solve Bitcoin program building scalability started about more than 18 months ago. We talked to a lot of the founders of Stacks, the founders of BitLayer, some BitVM devs, the guys who built Botanix and others. And we found there were massive issues and gaps with how they were taking their tech, because it wasn't Bitcoin native enough for large-scale institutional adoption, nor was it avoiding the issue of bridges or federations or sequencers, which are basic trust barriers, right? We've talked to multiple family offices. In fact, one of them is committed to come on to Tachi with at least 300K BTC once we go live. And their basic concern is, yeah, I'm not giving up custody, and I want unilateral exit rights. So I'm not going the WBTC route. I'm not going the sidechain route. I'm not going the L2 route. So for them, it makes sense now to say, hey, my Bitcoin is less useful to me than ETH is in my Bitcoin treasury. And that's what we need to attack very relentlessly. So what we had to do was, of course, go through multiple cycles of looking at what went right with everything from Omni to Lightning to Liquid to the BitVM experience, and what went wrong, right? And where the gaps were. In that process, we found that, hey, we could create our own new cryptographic proof innovations to finally make sats fully programmable with the trust assumptions of Bitcoin, run by Bitcoin full nodes, just like Lightning, but have a new innovation, what we call SatVM. And that's the key unlock for large-scale Bitcoin DeFi to finally come. I'm not talking about a few 300K or 600K. I'm talking about millions of actual Bitcoin treasuries, a couple of which we started talking to finally say, yeah, we're going to be onboarding our MPC wallets of our Bitcoin treasuries to finally have native yield from these EVM, SVM, and WASM SAT-denominated runtimes. So that means, for example, EtherFi is one that we're talking to. They've done amazing work in the Ethereum space. What they need from us is an EVM-compatible SAT-denominated runtime, which runs on Bitcoin security guarantees. That's what Tachi is going to be providing to all the blue chip players. And of course, we'll be in the future working with Bima and Liquidium and many others to have native SAT-denominated tokens and smart contract triggers, right? So the whole issue is most of TradFi hasn't woken up to the fact that they can actually utilize their Bitcoin treasury in the future for something that actually generates native yield and interest, because they're not comfortable with going the wrapped or L2 route. That's what we're targeting. So that's the long tail, but that's the massive opportunity for us.
Makes sense. Obviously, as I had mentioned, we met at David. You get the question after this. We met at BTC Vegas. What did you think of BTC Vegas? What did you learn there? What was the highlight?
Yeah, so like I said, we met a couple of very important family offices who've committed some capital for TVL. But more importantly, we met a lot of OGs and a couple of folks who've actually launched, for example, the guy who launched Nakamoto, which is, again, Bitcoin Media's Bitcoin wrapper, right? And Mooning, we talked to the UTXO guys, talked to a few other guys who are doing their own strategies in Europe and in the UAE. All of them were saying that, hey, phase one is done, which is that we have 100 different BTC wrapper companies trying to show that we have a delta above our core BTC holdings, maybe a volatility index or something else, to say, hey, buy us, don't buy them. The ETF issuers have a similar problem, which is that they've created this whole infra of hundreds of millions of dollars to support onboarding of tens of billions of dollars of BTC on behalf of their LPs. That was phase one, but now there's going to be 100 different copycats, which is already happening. You would have seen like Sora Ventures opening one every week in another Southeast Asian country. So that's not good enough. If I have 50 billion worth of custodied Bitcoin, now I have to then compete for phase two, which is how do I have the most efficient and effective use of my BTC? How am I returning a superior delta to my LPs, to my shareholders than anyone else? And the safest way to do it is through a Bitcoin native onboarding, but which has Visa transaction speeds, right? So that's the gap that we're solving.
Cool. Cool. David, did you have a question? Oh, hold on a minute. I can bring you up on stage.
Hey guys, how's
All
it?
right, all right, all right. That was a pretty good meetup last night, huh?
Yeah, it was great. It was great. Thanks guys. And thanks Lou for hosting this call. BTC, big fan of myself. Not exactly a maxi, but a big fan. I hold some since 3300. I was talking to some other folks. We've had some in our panels in Crypto Mondays in the past. I'm curious, what do you guys think of other folks out there like maybe Cordell or some of the other out there, and how you guys, I'm a big fan of everybody in the space that are trying to bring the space and Bitcoin adoption and gaining yield by holding Bitcoin forward. So what are your thoughts there? Competition, co-opetition, what are your thoughts out there? And again, I'm a big fan of all the innovation that's happening in the space. So sorry, it's a general question.
Yeah, absolutely. Let me just give my points and then say, do comment.
Yeah.
So obviously, we love anyone who's using Bitcoin instead of using random L1, because the value layer that we believe in is BTC, right? So any form of using that for any productive economic purpose, it works for us. Of course, again, like I mentioned, it's been a massive evolution. Core DAO, even Stacks and Rootstock and many others have gone the side chain route, which is that they're somehow merge mining back to BTC, and there's a bridge involved where you take BTC in a pegged or wrapped manner somewhere else. So it was a good initial step, but it was still like an intermediate step, I would say. And just to quickly make the point here, when you look at how BTC has evolved, right? You can see here that we started with what we call Gen 1, which is payment channels, right? We started with that. Lightning is still the most accepted meta protocol in the world. It's limited programmability. You can't really do true DeFi because of the issues with and limitations with taproot assets. Then what you mentioned came sidechains. So you have Stacks, Rootstock, CoreDAO, and many others. They again have, in spite of almost $500 million worth of funding, reached a massive scaling wall, right? Even though they're, like for example, Stacks been working on this since 2017. And that's because large-scale Bitcoin treasuries institutions will not trust node federations, a separate chain, and that peg risk with censorship risk. And that's where then you've seen in this generation of the last 1 year, you've seen BitVM experiments, so-called rollups, which again have this similar failure points, but they're trying to make it closer to the bare metal as possible. But that's where then the issue comes in. And how do you actually solve this issue for institutions so that it's not just 5,000 or 10,000 BTC onboarded, but millions of BTC onboarded to be productive and using DeFi? That's the critical issue that we saw. And that's what we're trying to basically build out. Just specifically what Tachi has invented, like we said, it's our spiritual successor to Lightning, which we use our new form of cryptographic proofs to allow onboarding through a leasing process where Bitcoin full nodes themselves verify and update cryptographic proofs for an extremely high-speed SAT VM-based runtime. So that's where the EVM blue chips can come on and use your self-custodied BTC from Bitcoin treasuries. So you can have Morpho, Aave, Ondo to actually come on board and use SATs instead of using WBTC, using the native security guarantees of BTC, right? So just like how Lightning allows you to have Alice sending to Bob without waiting for 60 minutes or 10 minutes, we allow extremely high TPS with 2 to 3 second economic finality through a cryptographic proof mechanism. I think that's the long-term way, going away from separate chains, separate L1s and separate L2s, and bringing the value as close to BTC, secured by BTC security guarantees. Because at the end of the day, that's why you bought BTC. If you are a true long-term holder, right? You're looking at it surviving any sort of attack, any sort of security, or even in the future post-quantum threat, which is also what we're working on. That's my first point on this.
No, I think it's great. And sorry if you're repeating this, I kind of joined in late, but it's, I've been in the space since 2018, since 3300s when I started to accumulate there. So I'm excited for all the innovation in the space.
Cool. Thanks, David. Sid, did you want to add anything?
Yeah, I mean, I'm biased with CoreDAO because CoreDAO is an investor in us. But I think one of the biggest things that I like about them is their dual staking approach, right? You stake some Bitcoin, you get some Core. I think that's a very interesting model. I think Babylon hopefully will go after something like this. I'm generally optimistic about everybody in the space. I think Core has done a wonderful job executing the majority of their ecosystem, a majority of their operations. They have a wonderful job with their sort of outreach and who they're looking for, because this is a custodian game with Bitcoin, right? You have so much assets, so many assets that sit in qualified custody, self-custody, and this is institutional, right? I think Robin said this very clearly. We think this is a retail space. It is not. This is not where the money is. In fact, the retail this was retail back in 2011. The retail back in 2011, the same guy that was like 1,000 BTC back in 2011 is not what we call retail nowadays, right? The demographic shifts as the price goes up. So I think Core has been a phenomenal ally to us as well, helping us with a lot of our sort of efforts with scaling and distribution. But yeah, I think that the infrastructure at the end of the day is, it's whether it's, a programming language difference, a speed difference, can it do the job? That's it, right? Can it actually do what it says it does? And if it is, I don't think that, I think then you have something to be happy about. So yeah, I think Core is phenomenal.
Yeah, thank you, Dave. I'm a big fan of them. Yeah.
And Robin will give you a chance next, but if anybody wants to ask a question, they don't want to come up, feel free to put it in the chat and I'm happy to answer it for you. Robin, what are your thoughts on CoreDAO and some of the other folks in the ecosystem?
I think, obviously, I think there are use cases for it, for like, I guess many of the side chains or other approaches that others are taking. When it comes to lending specifically, I think we just focus on native Bitcoin, because I think that especially in the lending sense, you kind of want to, like, if you use something as collateral, you want to have kind of like the most valuable thing as collateral. If I were fine to have something else than the native thing, I could just wrap my Bitcoin to another chain and use it there. So that's kind of like, I guess, why we keep our focus on purely native Bitcoin on-chain layer 1 transactions. I think there is enough compute power within Bitcoin. I think there are ways to utilize Bitcoin in a way where you can stick to the pure metal. Yeah, so that's kind of like, I guess, my stance on it. I think for particular use cases, like for example high frequency trading or perps or something like that, where you would want like even more programmability, where you would want like faster confirmation times, fast throughput of the chain, it makes sense to kind of deal with derivations. But yeah, I think that kind of like covers my point.
And Robin, were you at BTC Vegas or Prague?
Yeah, we've been at the Vegas conference. Had a great keynote there about our upcoming product, and also made some great connections. But unfortunately, we didn't meet there.
And so, I mean, did it kind of meet your expectations? Was it any particular highlight?
Yeah, I think it was amazing. What always, I guess this is like very specific to the Bitcoin conferences in the US. The amount of people that you would not expect to be there that still are there is enormous. Like so many people where you wouldn't think like they're that deep into Bitcoin yet. They are still there, from institutional people to kind of like large scale influencers and so on. I think Nashville was a great example. Like the political speeches of Donald Trump there, obviously, and so on. Like it just screams that we're coming to to a phase where Bitcoin isn't just like something for nerds that have like a Bitcoin node running on their computer in their basement or something, but instead it's kind of something that is like actually making waves in the large space, and more people are trying to get into it.
Do you
Don't
think
forget
that
Bitcoin isn't for nerds. It is for nerds. It's still for nerds. Bitcoin's always for nerds.
It's still for nerds, but
Always.
not exclusively for nerds anymore.
Yeah,
Not
That's what I
anymore.
mean.
well are
yeah,
the
cypherpunks will always be at the bleeding edge for sure. Yeah.
are the events in Europe, you think more cypherpunk?
I think that in like in Europe, so there is Bitcoin Amsterdam again in October. I've been to all of the Bitcoin events in Europe as well, and they are usually much smaller, and you don't see as many of these like traditional finance companies, politicians, and so on joining these conferences. At least not the, I guess, uh, like large scale companies and politicians. Like you wouldn't see like the Chancellor of Germany or something at a
A
Bitcoin
lot of
conference.
politicians.
Yeah,
And I say
like
the biggest,
it,
in addition to the politicians, for me, the biggest difference between the Bitcoin conferences and Web3 is there are, I think, as a percentage, more than twice as many females at a Bitcoin conference, because I just think there's a lot more money, and it's a lot more
could be.
established.
Yeah, no, I think like it's definitely a better brand. Like Bitcoin is a much better brand than pretty much every other cryptocurrency.
Hard to argue with that. Hey, Steve, welcome up on stage. Do you have any questions for our esteemed panelists?
Well, I didn't. It was already answered.
Okay.
So I had one, but it was answered.
Okay. Cool. Well, thanks for joining
I
the
guess
call.
the only thing I'd like to hear about is the difference between I mean, it's just taken as obvious, but I don't know if it's obvious. Why not Ethereum is really my question. Why always Bitcoin and not Ethereum?
That's what Wall Street is entering now, by the way. So Joe Lubin's
I
doing
mean,
his
you
best
still
to-
have what, something like 40% of transactions are on the Ethereum network,
Yeah,
right?
yeah, of course, yeah.
So
Ethereum
it's
was
a
built-
usable thing, and now we're making Bitcoin a usable thing, but it's an older technology, so it's a little counterintuitive.
Bitcoin obviously has different, I would say, selling points for OGs, for institutions than ETH, right? So it's the most secure value network till date. It survived the most nation-state attacks to avoid extinction, including China, including some would say
That means nothing to me. I hate to say it, it means nothing
it may
to
not
me. And
mean anything to you, but it
I'll
means
tell you
people.
why, because
Yeah,
they aren't
it
making that
means
decision for tech reasons. So the question is, which one's better? Are we in like you see, videotapes were adopted, not Betamax, right? But to a large degree, that was a problem. And if you look at any legacy TV show prior to HD, you basically can't even look at it at this point. And is that going to happen to Bitcoin in 20 years?
That's what we're doing
Despite
to
the
avoid
fact
it.
that everybody adopted it first,
Right. That's why we're innovating to make it as usable and as programmable as ETH with the security guarantees of Bitcoin, which are superior to ETH. Obviously, everyone loves ETH. Like we all came up and started building in a way because we saw what is possible with Ethereum. Vitalik built Ethereum because he saw that there's a massive issue with Bitcoin, right? So that's always been the case. But again, when you said that you don't care, the people with like large scale $1 trillion of assets to protect do, right? So once they care, institutions care, whales care, that means that there is now two things. There's a gap between what they currently have, which is digital gold, and usable cryptocurrency or usable units of value that can underpin a new economic system. So there have been multiple attempts, including my friends here, and a lot of our friends who have been building, have been trying to solve that with workarounds or with native approaches. And this will be the battleground for the next, I would say, 3 to 5 years to make this as good of an app experience for real capital flows like native insurance, native RWA, right?
Yeah.
Banks built on Bitcoin. That's what we have to make happen. Yeah, it's not happened yet, but we have to make it happen. That's why we're building that way.
Right. And then, okay, so now I'm just kind of arguing as a devil's advocate here. You know, my last question was like that, and so is this one. Just keep in mind, I did have the experience of pitching companies in the 90s when the question was, why prove to me that the internet can't crash? You know, so this is that kind of a question. We're afraid of quantum computing. We have to run forward anyway because we don't know what to do about it. But if anything is going to get taken down by quantum computing, it would be Bitcoin. So the question is that if you're investing trillions of dollars and you're a nation state, aren't you worried about quantum computing?
Yes, absolutely. By the way, Tachi, we're on a working group with David Chaum and Marathon and a few others to
Yeah, I
solve
love
this.
that guy, by the way. David's the
Yeah,
best.
yeah. So he's also advised this on our post-quantum like Bitcoin strategy. The issue is that there's a lot of R&D happening to do two things. One is to see what happens to the current wallets and addresses. How do we transition them to a post-quantum implementation, which can't be cracked by one supercomputer in China or, you know, like now even Microsoft's offering qubits, right? Which you can actually rent in a couple of years. So that's one thing that's happening. It's a race against the clock because, as you know, they estimated that it would take 30 years to reach a certain number of million qubits. Now it's down to less than 10 years. And who knows what will happen by next year? It might be down to 3 years. So that's a race against the clock for sure. But again, Bitcoin is not alone. We're taking the benefit of post-quantum researchers who are funded by actual, like not only NSA level, but Microsoft level, the big banks who rely on RSA, right? Gmail, HTTPS, all of that is as vulnerable to the same vulnerability as BTC. So we're getting the benefit of not only the small little bubble of Bitcoin researchers, but we're getting like all quantum cryptographers helping each other out. But that's the ray of hope for us. And obviously it's a race against, you know, the time, right? So we have conservatively between 3 to 5 years time to solve this. And that's what we do.
Right. And so bet on what's happening now, bet on what everybody is excited about, not on necessarily the technology, just because the technology is better. So it's a don't bet on Betamax bet. And then have faith. New technologies will come and we will be there when the problems are there.
No, now there's an asterisk to that. The beauty of Bitcoin and other decentralized technologies is that you have multiple working groups who are incentivized to continue upgrading that tech. Imagine if Betamax could actually say that we're getting fucked. Let's upgrade to DVD. Let's upgrade to Blu-ray faster than our competition.
Right.
Everyone create 1,000 working groups, get 10,000 researchers all over the planet. Let's find a way, and we adopt the best one.
That's right. And hopefully we're upgrading to streaming HD.
Exactly. Yeah, exactly.
Hey, Robin, what did you want to say?
Yeah, I just wanted to also get to your question about like why Bitcoin and not ETH. Like, so it's a great question, and it really depends on kind of like what is the purpose of what you're trying to achieve. And I think Ethereum and Bitcoin were made for two fundamentally different things. One is to provide an asset that is a store of value, versus the other one is made as a network to build platform on. So and Ethereum just happens to have a cryptocurrency, but it's like the value proposition of Ethereum is the network that platforms can be built on top of, versus the value proposition of Bitcoin is Bitcoin, not anything else. And I think because there are these two distinctions like that, that's why we see Bitcoin as the store of value that it is. And that's why we don't want Ethereum as the global currency or anything like that, because it's just a gas token for a network at the end of the day.
Right. And so the rise in price of Ethereum doesn't really make much sense and doesn't really help anybody.
Well, it is like you can treat Ethereum pretty much like a stock, I would say. If the network performs well, probably like if a company performs well, probably the asset of that company is going up. Same thing with Ethereum. If the network Ethereum is performing well, probably the Ethereum token goes up.
Right.
That's no investment advice, of course.
Right.
But
But
that's
Bitcoin is a
like,
totally different scale and a totally different value proposition.
Bitcoin is more comparable to something like gold. Even if we don't use gold in day-to-day things anymore, it is still an asset that people want to own because it's kind of like a limited asset that has this decentralized secure effect, that a hard cap and so on. And then kind of like going into your quantum computer question, what we also have to remember is that Bitcoin is not something like a videotape or something like that is not upgradable. Bitcoin is a living thing, and in fact, Bitcoin is being like, there are Bitcoin upgrades being pushed pretty much multiple times a year. Like there are updates to Bitcoin itself, where I know recently we had BIP 420, which kind of like introduced or like which is planning to introduce sort of like a concatenation back to Bitcoin. So a fundamental change to the code of Bitcoin. We have these changes all the time. There are so many and the community is kind of participating in upgrading that network. What that means is if there was a large attack vector from quantum computers happening, because quantum computers are being used more and are becoming kind of like a thing that you can use to crack Bitcoin, you can bet on it that every single Bitcoiner who has financial interest and incentive for Bitcoin to grow, that they will promote an upgrade to Bitcoin that will make it quantum computer proof. So it is based, and like if there is a large scale attack where Bitcoin gets shut down, you can bet that the community, and that's the beauty of decentralization, that the community will get together and they will push an upgrade, they will push a fix to fix the blockchain and kind of like fix that vulnerability.
Go back.
Get
back. Great answer. Okay,
beautiful
we're at
answer.
the top
Thank
of the
you.
hour. Yeah, this was a great call. Thanks a lot, Robin, Parth, Sid. Thank you. You were all terrific, and thanks everybody for coming.
Thanks
See you
for
next
having
time.
us.
Thanks, guys. Take care.